If you were hoping for one simple headline to explain Calgary real estate right now, February didn't give us that. What we are seeing now is a city that is starting to separate more clearly by property type, by price range, and by location. And that matters because the strategy that works for a detached home seller is not the same strategy that works for a condo seller. The experience of a buyer shopping in the West End is not the same as the experience of a buyer shopping in the Northeast. And if you try to treat all Calgary the same, you're probably going to misread the opportunity. I'm Uros Markovic with the Real Estate District, and in this March 2026 Calgary Market Update, I want to walk you through what actually happened in February, what the numbers are really saying underneath the headline, and what it means if you're planning to buy, sell, or invest this spring. At a city level, the market still looks relatively balanced. Calgary recorded 1,526 sales in February, with 2,766 new listings and 4,822 homes in inventory. That left the city with 3.6 months of supply. The benchmark price for all residential property types came in at $560,500. On the surface, that does not look dramatic. It looks like a market that is calmer than the peak frenzy years, but not weak across the board. And I think that is the first important point. If all you do is look at the citywide average, you will miss what is actually happening. Because citywide numbers are now hiding some very different conditions underneath. Some parts of the market are still relatively firm, some are balanced, and some are clearly giving buyers more leverage than they had a year ago. There is another detail here that matters. The benchmark price was down year over year, but the average price was actually higher than the last year. That tells you that the market is not just moving down in a straight line. It tells you the mix of what is selling matters. More expensive homes can pull the average up while benchmark prices soften. So if you're a homeowner trying to figure out your position, broad price headlines are becoming less useful. What matters much more now is your exact segment. Let's start with detached homes. Detached is still holding together reasonably well. In February, detached sales were 736, new listings were 1,269, and inventory sat at 1,941 homes. That left detached supply at 2.64 months. So that is not the kind of a market where sellers can be lazy and expect anything to happen, but it is also not the market flooded with detached inventory. Especially in the more affordable ranges, supply is still not abundant enough to create heavy downward pressure across the segment. That is why detached still feels relatively healthy compared to the rest of the market. The benchmark price for detached homes was $734,300. That is higher than January on a monthly basis, even though it remains below last year's level. To me, that says detached is not collapsing, it is normalizing. Buyers are more selective, they're taking a little more time, and they're pushing back when a home misses the mark on price or presentation. But good detached homes are still finding their buyers. And there is an important split inside detached as well. Not every district is performing the same. The West District was one of the tightest detached markets in the city at 1.9 months of supply. City Center was also relatively firm, but the Northeast detached market was sitting at 5.64 months of supply, which is a very different environment. So when someone asks how is detached market, the honest answer is which detached market. That district split matters because a seller in West District may be operating in a fairly competitive environment if the home shows well and it is priced correctly. A seller in the Northeast may need a very different strategy, stronger pricing, better positioning, and a lot more discipline around expectations. Same city, same month, completely different pressure levels. Now let's talk about semi-detached. This was actually the tightest major segment in Calgary in February. Semi-detached homes came in at 175 sales, 253 new listings, and 2.37 months of supply. The benchmark price was $682,200. So if you own a semi-detached home, a duplex, or a property that competes in that space, this is still a segment with a decent support underneath it. Again, this doesn't mean automatic offers. It doesn't mean 2022 conditions are back. But it means this segment has not seen the same supply level build-up as the condos and to lesser extent townhomes. For sellers, that is encouraging. For buyers, it means you may still need to move decisively when the right semi-detached property comes up, especially if it is in a strong location, updated and priced realistically. Now, row homes sit in the middle. This is probably the most strategy-driven segment in the market right now. Not extremely tight, not heavily oversupplied, just more balanced and more sensitive to execution. In February, row homes posted 270 sales, 491 new listings, and 887 active listings, leaving the segment at 3.29 months of supply. The benchmark price was $423,600. So, what does that tell us? It tells us that row homes are not dead. They're not frozen, but they're no longer in a market where you can just put something up and let momentum do the rest. In this segment, pricing matters, condition matters, location matters. Product differentiation matters. A well-designed townhome in a stronger district can still perform nicely. An average one with weak presentation and too much competition nearby can sink. That middle market dynamic is important because row homes are often where first-time home buyers, move-up buyers, and investors overlap. So when this segment becomes more balanced, negotiation starts to matter a lot more. And now we get to apartment condos where the tone changes the most. This is the part of the market where buyers have gained real leverage. In February, Calgary recorded 345 apartment condo sales, 753 new listings, and 1,580 active listings. That pushed apartment supplies to 4.58 months. The benchmark price dropped to $298,000, down more than 9% from the last year. That is not small adjustment. This is the clearest buyer-friendly segment in the market right now. There is more choice, there is more competition between listings, and there is less urgency. And buyers have a lot more room to negotiate than they do in detached and semi-detached. Now, that doesn't mean that every condo is a great deal. Good units in strong buildings with good management, good layout, and good location can still stand out. But sellers in this space are dealing with a very different market than they did a year ago. The days of relying on low inventory to carry the sale are gone in many parts of condo segments. And just like detached, condo conditions vary a lot by district. The apartment market in Northeast was sitting at 10.92 months of supply in February. This is a very soft market. The East was also elevated at 6.5 months. And by contrast, the South was much tighter at 3.45 months. So, even within condos, you cannot use one citywide number and assume it applies equally everywhere. This is why I keep coming back to the same theme. Calgary is no longer one market. It is several markets moving at different speeds. So, what should buyer take from this? If you are buying a detached home, especially in more competitive price ranges, you still need to be ready. You might not be competing the way buyers were at absolute peak, but the best listing can still attract attention quickly. Preparation still matters, financing still matters, and knowing your numbers still matters. And if you're buying a semi-detached, I would say the same thing. This segment is tighter than most people expect, so hesitation can still cost you when the right property comes up. If you're buying a row home, you're more into balanced environment. That gives you more room to compare options, negotiate on terms, and be selective. And if you're buying a condo, this is where you probably have the strongest leverage. More inventory means more choice means less pressure, and less pressure means better opportunities for buyers who stay disciplined and focus on quality. Now for sellers, the message is just as important. If you're selling detached or semi-detached, the opportunity is still there, but you need to respect the market. Overpricing is getting punished faster than it used to. Buyers have more options than they did during the tightest years, and they are not forgiving sloppy pricing, weak staging, or poor marketing. If you're selling a raw home, your margin of error is smaller. You need sharper positioning, stronger presentation, and a clear understanding on what buyers can get nearby. And if you're selling a condo, this is where strategy matters most. You're not just selling your unit, you're competing against rising supply, buyer's caution, and in many cases, several other listings that feel similar on paper. In that kind of environment, pricing late usually costs more than pricing right up front. For investors, I think this is also becoming a more selective market. The condo segment may create buying opportunities, but only if the unit, building, and numbers make sense. More supply can help with entry price, but it can also mean more competition on resale and more pressure if building is average or poorly managed. So this is not a market for lazy underwriting, this is a market for careful selection. And finally, for homeowners just trying to make sense of headlines, here is the simplest way I would frame February. This is the market that looked balanced from 30,000 feet, but became much more uneven when we get closer to the ground. Detached and semi-detached are still relatively firm, raw homes are balanced and more negotiation sensitive, in apartment condos are the softest segment in the most buyer friendly. And the district you're in can change the story again. So if you're thinking about making a move this spring, don't rely on generic market headlines. Don't rely on what happened to your neighbors 2 years ago. And don't assume your property type is moving the same way as the rest of the city. This is the market where local strategy matters again. And if you want to know what those numbers mean for your home, your price point, or specific area you're watching, send me a message and I'll be happy to break it down properly. Thank you and see you next month.